Hello students, I am N.K. Tukral from Edupedia World. Students, in the last session I had discussed on key terms, that is important terms used in various chapters of business studies. Also, the conceptual ideas were given to you on such key terms. To continue further today, again I am going to discuss briefly about the meaning and concept of key terms in balance or remaining chapters of business studies. One thing, students, I would like to tell you, and I would like to clear here, that briefing and concepts are being discussed here, not the definitions about these key terms. And I think so that you must be aware about these important terms and you are able to relate these terms with specific chapters and answers accordingly in the examination. In examination, if the terminology is used in the questions, at least you are able to connect with the related chapters and answers correctly. So let's go ahead, students, and let's take up the chapter on small business. The first key term in small business I have taken is here micro enterprises. Students, what is micro enterprises? What is the concept of that? You see, you must be aware that in the small business, the enterprises are classified from production point of view and service point of view. And classification of manufacturing enterprises, there are three types of enterprises: micro, small and medium-term enterprise. Similarly, in the service enterprises, same three categories are there: micro, small and medium enterprises. So here we are concerned here with the micro enterprises. Micro enterprises means if investment in plant and machinery does not exceed 25 lakh. In manufacturing enterprises, it is called micro enterprise under manufacturing sector. And under service sector, micro enterprises means if investment in equipment does not exceed 10 lakh. So that type of enterprise is called micro enterprises. So students, next key term is ancillary small industrial unit. As students, we have seen here in case of micro enterprises that classification has been done into three categories: micro, small and medium. But there are, besides these three type of enterprises, other small scale enterprises also. Number one is ancillary small industrial units, another is export oriented units, etc., etc. So here we are concerned the terminology ancillary small industrial units. What these and how you can define it? It refers to a small scale industry which supplies minimum of 50% of its production to another industry termed as parent unit, and investment in plant and machinery does not exceed 1 crore. This is called ancillary, and this comes under ancillary small industrial units. Next key term uses export oriented units. As export oriented, SSI unit is one in which investment in plant and machinery does not exceed rupees 1 crore and export at least 30% of its annual production by the end of the third year of commencement of production. That's why it categorized then it is an export oriented units. Now let's go ahead, students. Next key term before you is rural industries. I may tell you that, I may brief also you that how this rural industries concept came. You see, Government of India created the Ministry of Small Scale Industries and Agro and Rural Industries as the nodal ministry for formulation of policy and coordination of central assistance for the promotion and development of small scale industries in India. The ministry was bifurcated into two separate ministries. Number one, Ministry of Small Scale Industry, and second, Ministry of Agro and Rural Industries in September 2001. Ministry of Agro and Rural Industries is a nodal agency for coordination and development of village and khadi industries, tiny and micro enterprises in both urban and rural areas. It also implements Prime Minister's Rozgar Yojana. The various policies, programs and schemes related to agro and rural industries are implemented by the ministry through Khadi and Village Industries Commission, Handicrafts Board, Coir Board, Silk Board, etc. That's why how these are called under rural industries. Next key term used is tiny industries. Now students, what is tiny industry? Tiny industrial units. A tiny unit is an industrial or business enterprise in which investment in plant and machinery is not more than rupees 25 lakh. So I may repeat that, where the investment is not exceeded 25 lakh. Shops, photostat, STD booth in your locality are all the example of tiny units. Now students, let's go ahead. Next chapter I have taken is internal trade. What are the key terms in internal trade? Number one is wholesale trade. I think everybody must be aware. Already we have gone through in the chapter of internal trade that session, and clearly I had given explanation wholesale trade and retail trade. Here wholesale trade means refers to buying and selling of goods and services in large quantities for the purpose of resale or intermediate use. The traders who deal in wholesale trade are known as wholesale traders. Second is next key term is departmental stores. Departmental store is a large establishment which sells a wide variety of products and aims to satisfy all needs of the customers under one roof. For example, there may be a separate department for toiletries, fruit, vegetable, groceries, electronic and clothing. So these all comes under departmental stores. They satisfy diverse market segments with a wide variety of goods and services. Everything from pin to plain is the spirit behind a typical departmental store. Next is chain stores, or you can say multiple shops or network of retail shops which are owned by the single business enterprises. Its management is centralized. These shops are spread over different localities of the city or different cities. Like you can see McDonald's, Nirulas, Bata, all are these called chain stores. Features of chain stores are location, centralized purchases, centralized control, cash sales, revenue inspection, prices, window dressing, etc. All these are the features of chain stores. That's why they are called chain stores. Next is Chamber of Commerce. The Chamber of Commerce industry was formed as an association of business and industrial houses in order to promote and protect their common interest and goals. So the interest and goals are protected by these institutions, that is called Chambers of Commerce and Industry. For example, ASSOCHAM, ASSOCHAM, Confederation of Indian Industry, CII, and Federation of Indian Chambers of Commerce and Industry, FICCI. So these are the associations, and their aim is to guard trade, commerce and industry. That's why called Chambers of Commerce. So next is cheap jacks. Now students, what are cheap jacks? Cheap jacks is one of the trading community that comes under types of itinerant retailers. You must be aware that itinerant retailers are hawkers and peddlers, market traders, small street traders, cheap jacks. Cheap jack is a kind of retailer who generally hires a small shop in a residential colony only for a temporary period. Their setup is for the temporary period. Main features of cheap jacks are they hire small shops where they display their goods. They shift from locality to locality depending upon the prospects of getting business, and they generally deal in household articles, ready-made garments and other low-price goods. So these are the features of cheap jacks. They generally deal in household articles, ready-made garments and other low-price goods. They are unlike fixed shop retailers. Now students, let's go ahead and let's take next chapter, international business. Under international business, the term is before you, it's pro forma invoice. This is under import as well as export business. What is pro forma invoice? A pro forma invoice is a document that contains detailed information regarding price, quality, grade, size, weight and all other relevant conditions on which import or export will take place. This is what called pro forma invoice. Next is export license. Export license is required for exporting the goods. Simply for exporting the goods, export license is mandatory. So before exporting the goods, the prerequisites for getting an export license are obtaining a bank account, obtaining IEC number, obtaining RCMC certificate from Export Promotion Council, registering with Export Credit and Guarantee Corporation, obtaining a pre-shipment finance, protection of procurement of goods, pre-shipment of inspection, etc. etc. Like all these clearances and documentation needs to be done before getting the export license. Next key term used is IEC number. What is IEC number? Import Export Code number. This is for getting export license. This IEC number is required. The exporter needs IEC number to fill it in various import documents. To get the IEC number, exporter has to apply to regional import-export licensing authority in the prescribed form, which should be supported by the documents like profile of the exporter, bank receipt for the payment of fee, certificate from the banker, copies of photographs, attested by the banker, declaration by the exporter that they are not associated with a caution listed firm, detail of non-resident interest if there is any such interest in the exporter's firm. So these all are documents are required for getting IEC number. This is what IEC number is. Next key term is pre-shipment finance. What is a pre-shipment finance? You see, one of the criteria for obtaining export license is pre-shipment finance. After receiving the LC, the exporter approaches his banker for pre-shipment finance. Pre-shipment finance is a finance that the exporter needs for procuring raw materials and other components, processing and packing of goods and transportation of goods to the port of shipment. That is why it called pre-shipment finance. So students, let's go ahead. Next key term used in international business is excise clearance. What is excise clearance? So this is again one of the requisites for obtaining export license. According to Central Excise Tariff Act, exporter is required to pay excise duty on certain excisable goods and to obtain excise clearance certificate for the same. For the certificate, he has to apply to the concerned excise commissioner with an invoice. When the commissioner is satisfied, he issues the excise clearance. Further, I may tell you that in many cases, exported goods are exempted from the excise duty. If the duty is already paid, then it is refunded back to the exporter in order to make export products more competitive. Such refund of duty is known as duty drawback. That is a separate term. Let's go ahead, students. Next key term used in international business is before you. That is certificate of origin. This is a document used in export transaction. Certificate of origin means this certificate specifies the country in which the goods are being produced. It is needed by the exporter as some importing countries provide tariff concessions or other exemptions on the basis of this certificate. This certificate is also required when there is a ban on imports of certain goods in select countries. Next key term is letter of credit. I think everybody is aware about this letter of credit. What LC refers to, I mean to say letter of credit refers to, generally the foreign exporter wants to be sure about the credit worthiness of the importer. For this purpose, importer obtains letter of credit from its bank and forward it to the exporter. Letter of credit is a guarantee issued by the importer's bank that it will honor payment up to a certain amount of export bills to the exporter's bank. It must be noted that importer's bank issues LC or letter of credit only when it is sure about the financial soundness of the importer. So students, next key term is mate receipt. What is mate receipt? This is a document. It is related to shipment. Like documents related to goods are required. Similarly, documents required related to shipment under export transactions. Mate receipt is the receipt issued by the commanding officer of the ship to the exporter after the cargo is loaded on the ship. It contains details regarding name of the vessel, berth, date of shipment, description of packages, marks and numbers, etc. Mate receipt is an important receipt as shipping company issues the bill of lading only after getting this receipt. So students, next key term is bill of lading. Bill of lading is again it is a document. It is a document prepared by the shipping company to acknowledge the receipt of goods on board the ship and gives an undertaking to carry them to the port of destination. It is also a document of title to the goods and is freely transferable by the endorsement and delivery. So this is what bill of lading is. Next is usance draft. It is a type of bill. I can say it is a type of bill of exchange in which the drawer, that is exporter, instructs the bank to hand over the relevant document to importer only against acceptance of this bill of exchange. That is why it's called usance draft. So students, let's go ahead. Next terminology used in international business is before you, that is cart ticket. C-A-R-T, cart ticket. It is a document, that is cart ticket is a document is related to shipment purposes. Cart ticket is prepared by the exporter which provides details regarding export cargo like shippers names, number of packages, shipping, bill number, etc. Cart ticket is also known as cart chit or vehicle pass or gate pass. That's why it is used in the document during shipment. Next is import general manifest. So what is import general manifest? there are various type of documents used in import transactions while importing goods. So document like trade inquiry, pro forma invoice, imported order or indent or shipment advice or bill of entry, side draft, usage draft, etc. So one of the document is here in importing the transaction is Import General Manifest. It is a document that contains the details of the imported goods. On the basis of this document, goods are unloaded from the carrier. So let's go ahead, students. Next is C&F agent. C&F agents are the persons, or you can say agents, which helps the importer for clearances, all type of formalities, and complying the all type of formalities. As custom clearance is a tedious process and requires number of formalities, importers generally appoint C&F agent which are well versed with such formalities. So the things are that helps are taken by the importer from C&F agents for complying the formalities. Next is duty drawback scheme. According to Central Excise Tariff Act, exporter is required to pay excise duty on certain accessible goods and to obtain excise clearance certificate. For the certificate, he has to apply to the concerned excise commissioner. As earlier I told you, when the commissioner is satisfied, he issues the excise clearance certificate. However, in many cases, exported goods are exempted from the excise duty. So mind it, some goods are exempted from the excise duty. If the duty is already paid, then it is refunded back to the exporter in order to make export product more competitive. Such refund of duty are known as duty drawback. That's why scheme is produced or given by the government to get the refund of duty. So that's why it's called duty drawback scheme. Next is EPZ. EPZ means the full form of EPZ is export processing zones. You see, I may tell you that export processing zones are industrial estates which form enclaves from the domestic tariff areas. These are usually situated near seaports or airports. They are intended to provide an internationally competitive duty-free environment for export production at low cost. This enables the products of EPZs to be competitive both quality-wise and price-wise in the international markets. So export processing zones are set up, and for example, in Gujarat it is a Kandla, there is a Santa Cruz, Mumbai. In West Bengal, there is a Falta, Noida, Uttar Pradesh, Cochin, Chennai, etc. etc. Now students, next key term in international business use is ITPO. Now what is ITPO? I may tell you before that our Government of India set up from time to time various institutions in order to facilitate the process of foreign trade in our country. Some of the important institutions are Department of Commerce, Commodity Boards, Export Promotion Councils, Export Inspection Councils, and ITPO, etc. etc. One of the term is ITPO means Indian Trade Promotion Organization. This was set up in 1st January 1992 under the Companies Act 1956. Now it is 2013 by the Ministry of Commerce, Government of India. Its headquarters is in New Delhi. ITPO was formed by merging the two erstwhile agencies, that is Trade Development Authority and Trade Fair Authority of India. So ITPO is a service organization and maintains regular and close interaction with trade, industry and government. It serves the industry by organizing trade fairs and exhibitions, etc. This is what ITPO and their functions are. So students, today we have discussed in this session various key terms on various type of chapters, but mostly are international business. This is a very important chapter. You must be aware and you must go through, you must read properly each and every term in international business so that you can get good marks. So we have discussed today the meaning and concept of various key terms, and I think you will be able now to connect these key terms to the related chapters and answer properly the questions in the examination if asked for. So let us wind up today for this session today, and we will see the next chapter what we can cover. Thank you. Bye bye.